Good morning, traders. Welcome to an Ichimoku Cloud Chart Market Review of the S&P 500 Index. Since the last update, we were right about here and that we were heading down towards the standard line for a potential rebound there. The market did, in fact, rebound from that level. There was a nice swing trade back up to these current levels, that test. And we also saw we very much closely rebounded from this old breakout price there. So that breakout price there came into play as a key support level. So the market, after the breakout, comes the rebound, the retest of the old resistance levels for new support. That came into well, and then we also continued the rebound. Incidentally, this line was very close to the standard line of the Ichimoku Cloud as a potential rebound zone. So we're back up again. Now we're a little bit extended again. We're concerned that every time we get a little bit too far from the top end of the cloud, this level, we look at the where the price action is and the distance between the price action and the cloud. Every time it gets very extended, we're a little bit concerned. So the market's a little bit elevated, but still, we did manage to get a nice little couple of points out of that rebound. Downside risk is once again a retest of this 4394 zone, similar to that type level there, as well as this turning line 4327, the front end of the cloud. That's the new support zone 4311. That's another major support zone, and by that time, this standard line would have caught up with that level. So the key line in the key rebound levels to watch out for potential support in any kind of weakness will be this front end cloud chart level 4,300. We can see that pretty quickly if any of the earnings season is weak, etc. But so far, the market is still looking strong. A little bit of divergence here between the volumes looking a little bit light at these elevated levels on the daily. Let's go and look at the weekly. There we can see the risk also still very elevated from the top in the cloud. The market's been extended for quite some time. And also note the volume is tapering off a bit. So I do expect that over the summer months, we could easily see a correction back down to the front end of the cloud. This level 4175. And by that time, this level's picked up. And this level 40,062. This is a major support zone. So that's a cluster of support which we could see in any kind of weakness over the summer months. To expect the S&P to drop down to those levels if there's any weakness. Now, if we look at the monthly, we can see how extended this market is. We are quite far away from the front end of the cloud. So there is a significant consolidation risk in this market. Any kind of weakness over the next couple of weeks could see a significant correction in this market back down to front end cloud support. So 3.8 level wouldn't be uncommon to see. Now, just if we scroll further out, you can see how extended this market is. So it is quite a uncomfortable chart, simply because the slope and the angle of the line, as well from a pure technical perspective, we are very extended from the front end of the cloud. We look at the space difference here between the price action and the top end of the cloud. So there is significant risk, and also look at the volume. We are much lower here in terms of volume than we were back here at 09, etc. So also, this kind of extension makes the 99-2000 bubble looks largely irrelevant as a small, meaningless pricing experience, so to speak. So be aware, we are trading with incredibly high risk, but then the Federal Reserve is keeping the punch bowl there with lots of liquidity. So there is still lots of money floating in the system, chasing fewer and fewer returns. So the weekly chart, concerned about the downside risk to the front end of the cloud. On the daily, concerned about the pullback over the summer months to the front end of the cloud of 4308, and then the front end bottom in the cloud 4223. That's the other support levels to watch out for. Maybe we'll see a September, October low at that level. But let's go look at the 4-hour charts, a little bit more meaningful from a swing trade perspective. Beautiful rebound. I did trade this rebound after it became extended, pulled back, rebounded from the cloud support level, and what gave me comfort trading this was rebounding from this support level, as well as these old highs there. That old support level, let's put a line in there. These old highs here is part of a cluster of support, and the bottom in the cloud there. So we had these lines in, and you could see whenever the S&P gets to a key support level, nice swing trade from the bottom in the cloud. So I like trading these swing trades. You buy when it's rebounding from the cloud, and then you sell, take profit when it gets very extended from the cloud. So it will be interesting to see if the market will be able to, it's rebounded from the turning line of the cloud, It will be interesting to see if it's going to retest that, try and take out that high again, or are we going to drift further? Any kind of weakness, we'll see this 4350 being tested on the 4-hour pretty quickly, and then by that time this line, the standard line 4327, would have caught up. But key levels to watch out for any rebound would be this front end cloud level 4350, and then this 4309, and then the bottom end of the front end of the cloud. Those are the downside targets if the market rolls over into a brief correction on a 4-hour chart. But so far so good. Price action still above the cloud, and all I do is buy these dips as it tests the cloud and sell when it's extended from a swing trade perspective on the 4-hour chart. So far so good, but do remember we are very extended. It's a very expensive market to trade, and will be interesting to see what we're going to see over the next couple of months, but until October, August, September. Are we going to see the market dig back into this cluster of front cloud support zone? Until next time, happy cloud chart trading. Bye for now.